currency. The first is that you should not buy your crypto or your sushi in the same place where you buy your gasoline, okay? It's a bad idea, okay? You'll see these little crypto ATMs, which are very convenient for money laundering, by the way. Good for that. However, they also have 10% transactions fees associated with them. Your house doesn't have, pardon me?
Can you give it to them in crypto?
Actually, you can in Delaware. We have bought and sold houses in Delaware on Bitcoin, but yeah. So your house commissions are what, 6% at this point versus 10% on a Bitcoin ATM? So you don't want to do that. The second thing is that Bitcoin was not built to buy coffee, okay? Bitcoin's for big transactions, maybe buying a house, but for, $2 and $3 transactions, it's not going to make sense. The Bitcoin blockchain, as it were, is only capable of handling about 8 transactions per second. Okay, so it's not Visa, it's not MasterCard, but it does have some real uses behind it. So the way that I think about Bitcoin specifically is a type of digital gold. Okay, and what gold does is it holds its value well over time because there's a limited supply of it. So it's well recognized, people know what it is. And the early application for Bitcoin was global transfers. Okay, so a lot of the financial infrastructure that we have in the United States is built on rails that's 100 years old. So you've heard of the express bank wire, as in I will wire money somewhere and it will get there maybe in the next day or so, okay? That wire is actually a reference to the telegram because that's how money was sent 100 years ago and it's still kind of being sent that way now. And it takes a day or two to get anywhere. With Bitcoin transfers, you can do that in 5 minutes, right? That's very efficient transfer of money. Now, Bitcoin has another thing too, in that a lot of the transactions are anonymous. And it's anonymous in a way that's very similar to a Swiss bank account. When you send money to someone on the Bitcoin network, you don't actually know who you're sending it to, you just know which account it's supposed to be deposited in. But we don't necessarily know who that account belongs to, right? So I think that's leading towards some regulation such that down the road, you may have what are referred to as registered versus unregistered Bitcoin addresses. If it's registered, they'll know the owner, they'll know your social security number, they will be able to track it for tax purposes. If it's not registered, people won't accept your money. And that's already being the case for money coming in from cryptocurrency accounts to mainstream bank accounts. So that's something that's beginning to happen already. Now, you sort of think about this and you ask, hey, digital gold, that sounds great. What could be possibly worth more than digital gold? And you think about it. And I would suggest that it's digital oil. And that's what cryptocurrency named Ethereum does. Okay, so you think about what gold is good for. It's good for jewelry, maybe a little bit of electronics. It's good for coins. Think about what you can make with oil, right? You can heat your house, you can fuel your car, you can make plastics, cosmetics, and Twinkies. What more could you ask for? It's very versatile stuff. So the second largest token is called Ethereum, and it was spearheaded by a guy named Vitalik Buterin back in like 2015, thereabouts. And it is programmable money. And it's money that's used to fuel digital transactions. And every time a transaction happens, just like oil, a little bit of it gets burned away. So with Bitcoin, you have limited supply, and it's going to grow a little bit more slowly every year until it peaks out in 100 years or so. With Ethereum, because some of it's burned with every transaction, you actually have diminishing supply, which makes it potentially an anti-inflationary asset. And that seems very interesting to me. You can do all sorts of things with Ethereum. I'm going to talk about these non-fungible tokens, smart contracts. I'm going to talk about decentralized finance and the DAOs as well. So to start out with, you can do all sorts of things. Some of them are kind of silly. Like this was a crypto kitty that was sold for $6 million back in Ethereum's fraternity days. That was 2021. And what it is it's a non-fungible token, which means each token is unique. And if you owned the token, you owned the rights to this crypto kitty, and someone paid $6 million for it. Now, just remember that every tool starts out as a toy, okay? And this was a great toy, and we saw all kinds of crazy things happen. But if you think about it, how else could this be applied? And the answer is if you have a unique token that can be transferred electronically from one person to another in a way that cannot be forged or spoofed, what if you got to a point where ownership of that digital token denotes ownership of a physical asset, okay? Sort of the certificate of authenticity for a number of luxury goods now are being issued on the Ethereum blockchain. And this leads to one of the hot things right now in crypto culture, which is this idea of DePIN, which is decentralized physical infrastructure, which means tagging and following goods from their place of origin, tracking electricity, tracking storage, tracking wireless connectivity. So at some point, you're going to have potentially two currencies. You're going to have the dollar. You're going to have your government currency for the currencies that you spend things on. And then you're going to have this other currency system, the cryptocurrency system, the Ethereum system, for tracking payments on the Internet of Things. Okay, that's when your computer car goes shopping or needs to park. Okay, it's going to be able to do these things potentially on the blockchain. Another thing that makes this happen is this idea of smart contracts. So what happens when money becomes programmable? You can think about this as a mashup between money, legal contracts, and software code. So you can now write code. Actually, I've heard some people write their wedding contracts in blockchain code, but you can write code in ways that can be monitored over the internet. When certain conditions are met, money is automatically transferred, right? And this is kind of like the new thing in terms of transactions. And you can do all sorts of interesting stuff like this. One is you can track news on the internet so that you can tell who originally said what. So you can tell if your news is fake or real. And this is a part of what they're referred to now as Web 3.0. Web 1.0 was basically putting a note up on a bulletin board. Web 2.0 was social media, where the users could post their own content. Web 3.0 exists almost entirely on the blockchain. You can do things like track stock transactions. The head of BlackRock, one of the largest financial institutions in the world, believes that within 10 years, all stock exchange transactions can happen and be recorded on the blockchain, which is really, really big. This is very serious from an institutional perspective. Down the road, you think about mortgage transactions. When you buy a mortgage, you fill out a stack of paperwork about this high, right? You know, that's vintage. We don't need to do that anymore. We can do this all on the blockchain at some point. Employment arrangements, copyright protection, government voting. This is really interesting. Estonia currently does all of its voting on the blockchain. And again, because you can track every vote, you don't have double counting of ballots, right? Maybe we should think about doing that here too. So lots and lots of applications of smart contracts, which I think is going to be one of the killer applications for the blockchain. Now this looks like a mess, okay? I mean, there's a lot going on in this slide, but basically what this is saying is that everything that you can do in the conventional financial system, you can do in some way, shape, or form in the blockchain, okay? It is becoming a full ecosystem, still rather experimental, mind you, where you can do things like digital payments, write a check, send money into someone's digital wallet. You can exchange currency among, I think there are over 10,000 cryptocurrencies at this point. There are actually more cryptocurrencies now than there are stocks trading in the US stock market. You can use it to raise money via ICO, initial coin offering, instead of an initial public offering. You can buy insurance. Now you can actually buy what's called flight insurance on the blockchain, such that if your flight arrives late or departs late, you can get your money back. And you can do that only on the blockchain. And what they do is they're monitoring all the flight activity on the internet so that they know whether to make a deposit in your crypto wallet or not. You also have investing derivatives and then some new things that you don't have at all in the conventional system, such as micropayments, predictions markets, and again, some of these non-fungible tokens. So it's creating an alternate parallel universe for financial transactions, which I find just really super interesting. So this has grown rather quickly. People worry about robots, people worry about AI. This is what I would worry about. It's called the DAO. You probably haven't heard of this yet. This stands for Digital Autonomous, or sometimes Distributed Autonomous Organization, DAO. So everyone knows that right now Coinbase is the 800-pound gorilla of cryptocurrency in the US because all of their competitors have been shut down by the SEC. But there is a platform called Uniswap, which does the same amount of trading volume as Coinbase does. Last year, it was $465 billion. Coinbase has 3,400 employees. Uniswap has 0. The cost for buying and selling on Coinbase is about 1% if you use their standard wallet. And the cost on Uniswap ranges anywhere from 0.3% to negative 0.3%, meaning that if you do what they call a limit order or you provide liquidity on the platform, they actually give you money to do that, okay? So this is Coinbase's biggest competitor in the US at this point, is a company that doesn't even exist. That's kind of amazing. So DAOs, are not legal in Delaware yet, surprisingly enough. Yes, Clay, question. That's an interesting question. You can change into a stable coin, which looks like, acts like, and smells like a dollar, but it's not actually a dollar yet. Yeah, so the question is, can you buy and sell US dollars on a DAO? Curve finance, and the answer is almost, but not quite, okay? You can go into a cryptocurrency that tracks the dollar extremely closely, but it's not where you actually convert it to dollars, okay? You still need to find an on-ramp via the conventional finance system to do that. Coinbase is still the one for that, yeah. So yeah.
If that was a 3%, that was a 1%. But then by farming back to then convert the money, do this and do that, what is the real cost?
Well, yeah, it's either 1% or 0.3%. Now, if you do it on, you can do a lot of transactions using Uniswap. Curve Finance was another one, as long as they're within the crypto world. But again, you need to find an on-ramp to convert that into US dollars, which you could add 1% for.
Then you have to pay more money for that.
Yeah.
So because that ultimately equals a 1%. That gives 0.7% left.
Yes. Correct.
So would it be, not
It can, but there are a lot of other things you might want to do in other cryptocurrencies. Okay, so once you go into crypto, maybe you just want to keep in crypto for a while to do other things.
I keep wrapping my head around the whole thing, so.
Yeah, no, totally fair question. Totally fair question. Yeah, yeah. So DAOs are now legal in the state of Wyoming, which should be interesting. They have corporate personhood, corporate status, just like a lot of corporations are residents and born in the state of Delaware. Now DAOs can be born in the state of Wyoming. So I want to talk a little bit about the investment aspects of crypto as an asset class, because that's my work. I work as an investment manager. I've been managing money for people for the last 30 years or so. And this week, we've had some really frothy moves within the cryptocurrency markets. Oh my gosh. I mean, Ethereum's up like 30% in the last week. Kind of amazing. So I'm going to start by talking about what they refer to as the blockchain trilemma. In that there's an ecosystem of different cryptocurrencies, and within an ecosystem, everyone has their own niche. And developers are trying to solve three different problems. One problem is the idea of security, okay, how not to get hacked. And from that perspective, Bitcoin is the most secure cryptocurrency around. It's been around since 2010. It still has not been hacked or duplicated. And the code doesn't change. So it's super stable. Ethereum, which is the second largest cryptocurrency, is becoming scalable. It's becoming quick, but it's not quite as tight from a coding perspective. Sometimes it does get hacked, although it's been a few years. Now, Bitcoin hasn't evolved, but Ethereum is evolving rapidly. Last year, they changed the way that they reconcile their books. They changed their bookkeeping. And by making that change, they reduced their energy consumption by 95% overnight. Okay, that was last year. This year, they changed how they pull their trades together. And with that upgrade, they reduced their cost per transaction by 95% overnight. Okay, so I bought my first NFT 3 years ago. I found the cheapest NFT possible. It was 1 cent, and it cost $30 in transaction fees. Okay, just crazy, right? Now that would run about 30 cents on Ethereum using a level 2 platform. Next year, with Ethereum's upgrades, with improving vertical trees and some other things, it should run 95 times faster. Okay, so this thing is evolving at a tremendously quick rate. Now, there's another blockchain that's competitive to Ethereum called Solana, which has its own little niche. And that niche is it's super fast, super scalable, super cheap, and it's reliably unreliable. It crashes all the time. Now, why would you want to use this? If you're tracking video game tokens, okay, or pictures or baseball cards or whatever, that's not a bad platform. There's a place in the ecosystem for a lot of different coins, and those are just 3 of the big ones. So I've been in Ethereum, again, for about 8 years or so. And every year I'm up or down by a lot. Okay, I tell my wife, hey, honey, I lost the beach house again. Okay, because it happens a lot. This is a chart of risk and returns of various assets. And you can see bonds usually are the lower left-hand corner all the way down here. Okay, so bonds right now pay what, 5, 6, 7%. They have standard deviation of 5, 6, 7%. Average return on stocks is around 9 or 10% with a standard deviation, meaning that they go plus or minus 16%, 66% of the time. And then way out here in orbit somewhere, okay, This is Ethereum, which has had annual gains of about 50% per year with a standard deviation of 137% per year. That's amazing. This comes with its own leverage, okay? You don't need to buy options or futures or buy this thing on margin. This thing is that volatile. So, pardon me? We're going to talk about that. We're going to talk about staking and baking in a few minutes. So yeah, come to the right crowd for that. So yeah, with this kind of volatility, every 3 or 4 years, you have like this near-death experience. I'm just telling you to be prepared for that 80% drawdown because it happens a lot, okay? And we had this 2021, 2022. The value of Ethereum lost. Oh, what does this say? Yeah, about 80% of its value for 2 years. Nobody made much money in this, right? It lost 90% of its value. Go back in 2019 through 2020. But through all of that, it's gone from where I got in at $10 per coin to about $3,700 as of today, which is kind of amazing. Now, Morningstar has done some research and they say, hey, this is a crazy volatile asset. Does this have any place in a portfolio whatsoever? And here's the research that they did. And this is a little bit dated, but I think still pretty good, that if you have an 80-20 mix, averaging 15% return, I don't think we've seen returns like that for stocks and bonds recently, but a drawdown of 16% hypothetically. I think this was for the previous 10 years. With a portfolio that had like a 1% stake in Ethereum, you could pick up an additional 8 percentage points worth of return with not really any changes in the drawdown. That's the amount that you lose before things start to get better, before you can like crawl out of the basement again, right? At 3% Ethereum, your returns go up even more. Volatility doesn't really change. But once you start hitting that 5% zone, right? Again, this data is a little bit dated, but that's when having cryptocurrency starts having a real impact on the portfolio risk, okay? So the magic number here is about 3 to 4%, maybe 5% at the most in terms of what I'm comfortable allocating to cryptocurrency in a client portfolio. Because if that 3% goes down 80%, maybe you lose 2 to 2.5% off your portfolio returns. That's survivable, okay? If you put your whole portfolio into this and it lost 80%, that's not survivable, okay? I'm a big fan of making a lot of mistakes, but keep them survivable, right? You want to be able to walk away from them. And you can't do that if you own a lot of cryptocurrency. So big move in the last week. Ethereum's up 30%, as I said. Question comes up is it too late to get in? What's the risk? Is it kind of expensive now that it's back to 3,700? The all-time was right around 4,500. And this is a resource that I use. It's called Glassnode, and they are able to run some basic metrics to find out whether a cryptocurrency is expensive or whether it's cheap. And what they do is they look at the value of the currency relative to the value of the transactions that happen on that currency. And you can see by this metric, we're really nowhere near where we were in 2001 or 2018 or 2017. So there's some risk, but it's not frothy yet. I actually know when the market's frothy, and that is when people find me interesting, okay? Like when I go to the barber shop and everyone stops talking so that they can listen to me, that's like the end is near, okay? Like my wife's a doctor, they usually want to talk about their sinus problems. But like when they want to talk money, then, something's kind of hot, right? So this goes back to Clay's question in terms of how do you park your cryptocurrency? And you know how to park your money at the bank, right? You put it into a money market account or into its CD, and rates went from what, nothing 2 years ago to like 5% now, and that's better than it was. You can do some of the same things with crypto, but not without risk, okay? One is called staking and baking, and that's where you keep it on deposit, where that can be used to validate other transactions. The SEC is debating on whether or not this makes it a security. That remains unresolved as of today. But the yields that you can get from staking and baking crypto on deposits, somewhere between 2.5% to 12%, depending upon the exact coin. You can also lend it out, just like you can lend out real money. So maybe someone else can speculate with it or buy a house or do something. And lending rates on peer-to-peer lending for cryptocurrencies somewhere in the 3 to 16% range. It's going to be higher than it is putting on deposit. And in this case, remember, it's not return on your money, but it's the return of your money. And sometimes when you lend it out, it doesn't come back, right? And that's why you get paid more in the way of interest when you lend out your crypto. The other thing that you can do is something called, oh yeah.
We've been here a half an hour and I'm uncomfortable in the fundamental question. What the hell is cryptocurrency? And what is
Yeah.
going on here? I have a background in finance too,
Oh, nice.
and I've practiced it for 50 years, but I don't know what cryptocurrency is, and I haven't heard it yet. Now,
Sure.
could you tell me what cryptocurrency is?
I should have done that in the beginning.
Stuff, but I don't know.
Okay.
What is it? What need in the world did it ever serve to get created to begin with? Wasn't always being taken care of, and it's just fundamental stuff. And this sounds exciting, but I don't know.
Yeah,
Sure.
right.
Sure. Okay. So what we'll start before we talk about crypto, we'll talk about the blockchain. Okay. And a blockchain is simply an indelible record of transactions. Okay. So when someone pays someone else, you have that record. When that someone else pays someone else after that, you have a record. So every time you go to the store, you take a receipt with you, a cash register receipt. And that receipt gets signed off by the next person, and by the next person after that, and by the next person after that. So you have the complete history of transactions. Everyone who has ever touched that money from the beginning. You know who held what when, and there's no faking it, there's no forging it. The blockchain itself, it is stored on the blockchain. It is a public record, which you can look up on the internet. And you can look at the history of a wallet. You can look at the history of a single coin, and you can tell every wallet that has ever touched since it was born.
So it's
It is still just an account number, which they are trying to associate with names now. Yeah. Yes.
So then I bought a Bitcoin, or a piece of a Bitcoin,
Yes.
it has my own money. Then I decide to sell it. So then the person so each Bitcoin has its own series of transactions.
That is correct. Yep. Absolutely correct. What is the Bitcoin? What is blockchain, and why does cryptocurrency matter? And I think it ultimately deals with rebuilding trust. It's having a single source of truth, and that single source of truth is the blockchain, which records everything ever said on it and every transaction made on it.
Who does
The system, the software itself.
system solve?
AI.
It's not actually AI. It's part of what they refer to as mining, which is the process of validating all of the transactions so that you know whether a transaction is real or not. And again, it's very, very, pardon me?
Are you saying if it actually happened or it didn't?
Mhm.
You said if it's real.
If it's real or not.
But the coins aren't real.
Well, the coins are digital.
They're an accounting,
They're software, right? It's software code, but
by increase.
it increases slowly over time for Bitcoin. Yes, it does.
She said, if I buy one and everywhere it goes, but there's just one. and
There's just one of that coin.
So how do new coins come into existence?
Yeah, so what happens is that as the books are reconciled, there's a lot of heavy lifting involved with bookkeeping, right? And it takes work. And the way that Bitcoin is mined is you're solving a code. You're breaking a code to balance the books. And periodically, you are given a reward by the system. It's almost like a lottery ticket. And that is paid out in the form of 1 Bitcoin to the successful miner who managed to balance the books that minute.
Bitcoin that didn't exist before.
A newly minted Bitcoin. Correct. Yeah.
And what's stopping it from having any errors?
The thousands of miners balancing the books together and reaching a consensus. So what happens is if you want to hack into the Bitcoin system, you need to do a few things. First of all, you need to find all the computers doing the mining. You need to find the accounts that they're doing mining for. You need to hack into all of them simultaneously, and then you need to change the code. And that's really, really hard to do within a distributed system. And that's why it hasn't been done yet. Right? Can you imagine trying to break into thousands of computers all at the same time and changing them all at precisely the same moment?
So if somebody who's mining has a specific set of rules that they have to follow,
Yes.
protocols or
Mhm.
or software, but certain software that they use to run their programs, I guess.
Yeah. And it takes a lot of power to run a Bitcoin mine. It's not an efficient process. There was an interesting story. I used to be on the board of trustees for the Grand Opera House, and they had problems with the lighting, because the lights would go dim and they didn't know why. And it turned out that they had a Bitcoin mining rig on the 3rd floor. And when they were mining the Bitcoin, it soaked up all the power for the Opera House, and it kind of dimmed the lights on them, right? So it is a very consuming process, as it were.
Does it require all of this?
No, it does not. No, because it has a different way of balancing the books. Yeah. Yeah. So, the thing is if you had this phone book of transactions that you're carrying around, imagine if you could write notes in that phone book, okay? And along with buying and selling, you can put in a personal note saying, this is what I bought it for, or maybe this is my complaint against the government, or maybe this is a record that some other transaction happened. All of a sudden, the blockchain becomes sort of a source of truth. And that's one of the reasons why it got shut down in China, right? Because once you put something on the blockchain, you can't edit it, you can't censor it, it doesn't go away ever, right? And that's a very powerful thing. So if we look at where crypto is legal and where it isn't, this is a global thing. Japan was actually the first country to completely legalize crypto about 10 years ago. Legalize it. Yes, it's completely accepted in Japan, traded heavily in South Korea, traded heavily in the US. It's still a little bit of a gray zone in the US. I mean, the government can't figure out whether cryptocurrency is a security, commodity, or butter substitute. Like, we just don't know what it is, so we don't know who regulates it. It's very, very murky right now. Bolivia, and I believe that's Algeria and Morocco have banned it altogether. The UAE, United Arab Emirates, is really looking at it as sort of, a growth engine for the next generation of their economy past oil. So it's still kind of a gray zone at this point, to be honest. We're still trying to figure out exactly what this is. Now, there's a lot happening just this week in cryptocurrency. This is kind of a make it or break it kind of situation. On Thursday, two things are happening. One is called the FIT21 legislation, which offers various levels of consumer protection for cryptocurrency transactions. And it also would put cryptocurrency regulation under the Commodities Futures Trading Corporation, okay? So again, right now, nobody knows who's even responsible for regulating it. The SEC has been kind of regulating it, but they're putting penalties based on laws that don't exist, right? And that is not an optimal regulatory environment when you don't even know what the rules are, and that's kind of where we are right now. So that's happening on Thursday. The other thing that's happening is the SEC has a deadline to either approve of or disapprove of exchange-traded funds backed by Ethereum on deposit. And they actually approved that for Bitcoin last January. And ETFs based on Bitcoin have been the most successful ETF launches to date by far. I mean, it's been amazing. So if that happens, you're going to see a huge jump in Ethereum if that ever goes through. Yes, Clay. Absolutely. A lot of rumors saying that the SEC is softening its stance towards Ethereum cryptocurrencies. They're proceeding along with filings. As early as last week, people were saying there was a 75% chance that it's not going to happen by the end of the year. Now people are saying it's like, pardon me? Yeah, they did. Yeah, they got hammered, right? So we've had a lot of enthusiasm this week. I don't think that the SEC really wants it, so they might drag their feet on it anyway. So I'm a little bit cautious on adding more Ethereum this week. Bitcoin, I think, is going to be fine. You know, that's commodity. We already know how that's regulated. So this is one reason why you might want to think about using cryptocurrency as dollar hedge, okay? Because I don't totally trust the government when it comes to regulating cryptocurrency, but I don't trust the government when it comes to regulating their own currency either, okay? Because on the left, we have a chart of the US money supply growth. And it was kind of like going along, you know, until like 2008. And then from 2008 to 2020, it went through the roof. And by the time COVID happened, we were like throwing money out of helicopters, okay? We were so desperate to keep the economy going that we increased the money supply by 30%. When you do that, you're going to have inflation, right? We should have 30% inflation. Pardon me?
I guarantee it.
We kind of did. It kind of happened, right? And there's no holding the government back from printing out more money. Now, Bitcoin, if you look at that, I said that there's a limited amount that's produced every year. And the rate of supply increase goes down every 3 to 4 years for Bitcoin. And by the time we get around to about 2040, 2050, beyond, we're going to have 98% of all the Bitcoin that will ever be produced will be produced by then. So instead of having 3 or 4 or 8% inflation as we've had in the US, you're going to have a much lower rate of inflation for Bitcoin production. The algorithm. It's not people. There's no politics. It's just an algorithm. It's a disinflationary policy. Yeah, as a backup, Now, my family goes back a long way in banking. Okay, so this was the expense account for my great grandfather. His name was Raphael Parise. He worked at Chase Manhattan Bank. This leather bound volume. It's sort of a family antiquity. And he kept his records for what he spent on in the early years of his marriage. So he paid $8,400 for his house. It was in the Bronx. It's probably worth maybe $500,000 or $600,000 now. Property taxes for the full year were $20. We're never going to see that again. The piano, my gosh, the piano cost 1/10 the price of the entire house. That was your home entertainment center, right? Everybody had to have a piano. The car cost as much as the piano did. That was the Model T that they bought. And this was 1913. Yes, yes.
The year the assembly line started, no?
Yeah, it was the very, very beginning of a lot of things, actually. And then we had the vacuum cleaner. So the piano, we actually couldn't give that away recently. We tried. The Model T is history. The vacuum cleaner was funny because they paid $59 for it. That's probably what it's worth as an antique. And they bought it in an installment plan. Okay, so they paid for that, I think like $1 a month for like 3 years or something like that. But yet to the point, 1913 was an interesting year for two other reasons. One, that was the year that the Federal Reserve was built in the US, okay? And two, it was the year that the personal income tax was created in the US. Coincidence? I don't know, okay? Federal Reserve, personal income tax, that one pays for the other, possibly, don't know. So I'm going to end with a few speculations and provocations. These are not predictions or forecasts. These are scenarios. Your mileage may vary. Don't try this at home. Consult your physician, okay? But I'm going to drop these little bombs out there just to see how you guys respond, okay? And you can kind of tell me whether you think this is for real or not. The first one, a possibility that by 2030, the Bitcoin blockchain will collapse under its own weight, okay? So I talked a little bit earlier about how expensive it is to run this thing. The energy consumed maintaining the Bitcoin network today exceeds the electricity consumption of Norway, okay? The entire country, first world country, it's legit, everybody gets electricity and this burns more than Norway does, right? What happens if it gets so expensive passing these phone books around, balancing the books and doing the accounting for Bitcoin that nobody can afford to do it anymore, right? Does the thing fall apart? Or does Bitcoin become so valuable that it continues to pay for itself? Yes.
Blockchain is what uses all the same. Is that the blockchain?
That type of blockchain, yes. A lot of different flavors of blockchain. This is the one that runs Bitcoin, which is very energy consumptive.
So if you're concerned about the environment, that's probably not it.
It's probably not it. Yeah. Yeah, that's not it. So yeah, the analogy that I use here is Bitcoin is like the crocodile of blockchain, right? Crocodiles have been with us for like what, 150 million years? And they haven't evolved because they really didn't need to, right? And that's what Bitcoin does. They are in this part of the ecosystem that doesn't need to change. It's ugly, maybe a little dangerous, but it's efficient at what it does. So this is sort of my first idea. I'm curious, am I selling you on this? How many of you think that like Bitcoin is just going to like fall apart in the next 5 years or 10 years? Okay, yeah, like a chance, like maybe it could. So it's sort of plausible, okay. Second one gets kind of controversial. What happens when governments start issuing their own cryptocurrencies in China? Pardon me?
That's pretty much what they use now.
Almost, except they don't track your dollars as well as they would like to.
But there is no, it's crypto, it's not tangible.
It's digital, but it's not crypto.
No.
Yeah,
no physical money.
And it's also not decentralized, it's very centralized. Pardon?
It's not even paper.
And it's not even
That's
paper.
why I'm saying it is a form of crypto, and I guess the definition is slightly different.
It's getting there. It's getting there. But in a real cryptocurrency, you can program it, which is what they did in China 2 or 3 years ago. They were in a lottery, and the winners of the lottery received the equivalent of $30 US in cryptocurrency. And you can go and you can spend it at the coffee shop, or, you know, buy a donut or whatever. And then at the end of 3 months, they pulled the plug on it. So like everybody's money disappeared, right? And from like their perspective, this was kind of amazing because you could control whether people had money or whether they didn't have money. And you could control where they spent their money or didn't spend their money. And you can incentivize them to spend more money if you wanted them to. So it introduced a lot of controls that could be very appealing to a government. Now, there's a lot of conversations as to whether or not the US will issue its own cryptocurrencies and pay people in crypto in the next 10 years. And again, I don't think that they have the knowledge to do that. Again, they're still trying to figure out what cryptocurrency actually is, much less build their own. So I don't think this is an immediate concern, but I don't know, maybe in 10 years, we'll have some sort of digital dollars. I'm kind of curious what you think about that one.
I don't know what I think about that, but so in this example in China,
Mm-hmm, mm-hmm.
and all of a sudden said 800 people have $30 now.
Yeah,
And then at the end of 6 months, they now say, oh yeah, that's not real.
yes,
Give it away.
uh-huh.
So then how can we trust any of it? Any of it.
Well, the stakes were low. It was all rather experimental at the time, right? Ah, okay. Now that is going to create a little bit of an echo here, but yeah. And also, what if that's the only money that's considered legal tender, right? Then that's kind of the trump. What if you have to accept it at that point? So yeah. Yeah, Clay. Mhm. Well, that's the beautiful thing is you know exactly who paid whom and how much and when.
Really, so when you're brought, well, it really does produce an
I know, but I'm trying to think how to get people on Zoom to hear.
Oh,
This is on
Bob,
Zoom.
on about that.
Not just-
Yeah, right now.
okay. So if you're trying to bribe a politician, you can't bribe it with a crypto that's on the blockchain. It goes right back to him.
Yes, so the question is, how do you bribe someone in crypto? The answer is not really unless they have an anonymous account. I shouldn't have this conversation, but that's how you would do that. Yeah. Mhm.
AI then going to be a threat to all the security of the system, or is it going to be enabling to make the system more efficient?
Yeah, so the question is AI a threat to the system or will it enable the system to grow? And I actually think you're going to have two different systems, okay? You're going to have the voluntary payment system, which is still going to be denominated in dollars for your everyday, you know, go to the Acme, the Target, pay your utility bills, etc. That's going to be in dollars for a long time. But when it comes to peer-to-peer payments on the Internet of Things, using AI, using software, using smart cars and appliances and so forth, you're going to see more and more of that happen on the blockchain. So you're going to have both running in parallel for a while. Yeah, Clay.
What crypto is going to be used when they go to
That's an interesting question. So the question is, what cryptos will be used when they go to CBDCs? I'm thinking either they will build their own from scratch, which is going to be work, or they will put it on the Ethereum chassis, which is becoming the most stable alternative. And that's one of the things that you can do with Ethereum is you can print other cryptocurrencies that are not necessarily the same as Ethereum. But that's my best guess. And I don't even know whether we're going to have central bank digital currencies or not. I have a sense that it's going to be a temptation that's a little bit too rich to like turn down for governments in a few years, So that's my best guess. My last provocation, and I'll leave on this one tonight, is I think the real application for Bitcoin or for cryptocurrencies and for blockchain deals again with managing the truth, with keeping permanent records and transferring those records safely from one person to the next. And I'm going to use an example of your driver's license. Okay, so you go to a bar and they ask you how old you are, and you give them your driver's license. And that driver's license does say your date of birth, but it gives them all kinds of other personal information. It tells them your height, your weight, your address. Okay, you are oversharing every time you give someone your driver's license. With blockchains, if you have your own personal blockchain, and if that's the place where you store your medical records, your education records, your work history, that could be the single source of truth for every institution that you work with. And you could be asked to give permission to share any or none of that information with other people. And it will be verified anonymously on the blockchain. And I have a feeling that when you combine that with biometrics, which would include eye scans, fingerprint scans, two-factor identification by a cell phone, that eventually we will go away from having physical wallets to having no wallets at all, because the information and your wealth and your health will be stored somewhere on the blockchain, right? And I think that could be the long game. This could be how you go through immigrations at the airport, for example. It could be your driver's license. I know Google Wallet, they're trying to get driver's licenses approved for the Google Wallet, so your phone becomes your wallet. I think that's just a transitional state. But there's a lot of applications down the road for this that I think are going to be really very interesting in terms of how we maintain our personal records. So yeah, that's really all I had to share for you today.